Good morning, everyone. Welcome to the Modern Market, where every day we discuss every single thing to do with the modern market. That is the crypto market, the NFT market, and how to spot some opportunities and hopefully make some or a lot of money on the internet. Loaded up for discussion today. We've got crypto up, ETH and Sol jumping the most out of the majors on the positive. FOMC meeting. Filecoin was also up 21%. We'll give a bit of a breakdown on what's going on there. Got Trump media execs allegedly launching a SPAC to raise $179 million, eyeing US-based crypto and data security firms. Interesting news coming out there. And finally, Privy is raising $15 million, led by Ribbit Capital, to continue to build the Web3 wallet infrastructure. A lot of infra stuff getting done, a lot of M&A on the horizon. Also had the news of Kraken close to buying a futures platform. So interesting stuff there. We've also got the latest on price action and general market thoughts coming up today. I've got Legendary in the co-host seat with me today. We're ready to get into it. But just a reminder, friends, that nothing that we say here is financial advice. This market is very, very risky. We don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 20th of March. How are you doing? How are you feeling?
GM, doing pretty well. I've been observing two things happening on my timeline. The first thing is that I get more and more political content than ever. I mean, obviously, we do talk more about it on the show. And one thing that I found pretty amusing out of all the hit pieces was an interview with Howard Lutnick, Secretary of Commerce, where he was saying on TV, Tesla is so cheap. You need to buy Tesla. Such a great buy. And obviously, we had Donald Trump having the Teslas in front of the White House. It feels like Elon Musk is assembling an army of KOLs to shill his company. That was definitely interesting to see. Let's frame it like that. And the other thing was just a massive influx of DeFi-based games. There's like a Wolf game-like, DeFi game launching on Sonic. And I've seen another one that's kind of like DeFi dungeon style. So it feels like that we're revisiting the DeFi kingdom, the Wolf games of last cycle, and are launching them on a couple of L2s or L1s. But that seemed to happen like all within the last week or so, because I've seen more than like 5-6 of these games suddenly pop up. I don't know if you noticed that as well.
Did notice a couple of the games. Definitely in line with the general thought, which I've said, crypto is becoming increasingly. I mean, I know you're making a general point, a more political point, but crypto itself is becoming more political and more corporate at the same time. So I think those two things are happening. Yeah, I mean, I suspect Elon is and the Tesla team are not so happy about how the share price has plummeted since, or it's given up all of the gains of the Trump pump. So I suspect they're not like super happy about that, or a lot of people are not happy about that. Maybe calling in a few favors here to try to put a bottom in, or try to resurrect it a little bit. But I think until the broader uncertainty is dealt with, I don't see the volatility stopping. Having said that, the thing that I've been looking out for, and it's kind of what I've been saying the last few days, where, you know, hype is better here than it is at 30. Bitcoin is better at 81 than at 109. You know, these things keep happening, and some of the downside seems to be slowing, or like we've certainly stopped going down in the aggressive way that we were at one point in time. Sure, we could go down a bit more, but it feels like that's slowing down. At least the descent has slowed down. So I wonder what your thoughts are there, Ledge. Any considerations?
Yeah, I do share the sentiment. The thing that I am still contemplating on is what to do with Tesla specifically. And it's something the both of us have talked outside of the show, just from the perspective that I think both of us, it's fair to say, want to have some sort of portfolio exposure to human robotics. And Tesla is still one of the very, very few publicly traded companies that you can buy in that segment. Just yesterday, I've seen a video of Boston Dynamics and their humanoid robot, who is now perfectly able to do backflips and very athletic moves, but obviously that company is not publicly traded. It's a bit more difficult to get exposure to that. So that's kind of the thing with Tesla, where I keep going back and forth. On the flip side of that, I've seen that a lot of people are trying to sell their Tesla because they're afraid that they just will have massive insurance premiums because of all the vandalism that's going on at the same time, which would put more sell pressure on the, I almost wanted to say on the floor price, but on the secondary price, and also drive primary sales numbers down. So I'm still torn when to buy Tesla. If to buy Tesla, do I DCA in? Do I ignore it? I don't know. What's your stance on that?
My stance would be the same as with any other riskier asset which you like. I think these levels are significantly better than the much higher ones. And so if you wanted to build a position, my stance would be to start building. Like I think trying to climb all the way in and time the bottom, although it's tempting, it's kind of fun thing to try to do every now and again. You'd feel pretty sick if it then, the bottom continued to go further. So I think these levels are attractive across the board, and I don't know if that would mean full porting it necessarily, but starting to have a nibble at the things that you like will obviously feel much better than if you had done that a month and a half ago when stuff was significantly higher. So I'm kind of thinking that's my kind of stance. I think we could go a little bit lower as well. I don't necessarily think this little jump up means we're completely out of the woods, but I think we're at levels that are kind of enticing for a variety of these things. Any final thoughts there, Ledge, before we get into the headlines and all the good stuff?
Nothing to add to that. Let's get into the price action.
All right, let's do it. As usual, starting with the price action to get you up to speed with everything that is going on today. We have Bitcoin up a couple of percent. Wait, hang on a sec. How has this happened? Bitcoin's up a couple of percent. I thought ETH was doing great. What? How has this happened? The
I
Bitcoin's up
posted
a couple of
yesterday.
percent.
You have a small window of opportunity to buy ETH above 2K, and that window has closed.
I mean, people were bull posting ETH. I thought it was up 6%. Suddenly, it's just sold off beneath. So now it's back under 2. Okay. So anyway, Bitcoin's up a couple of percent above 85. ETH is now almost down a percent to 1.9. Solana's up a couple of percent to 130. That's changed significantly even from when I wrote the snapshot just a moment ago. Other majors, XRP is up almost 7% to $2.50. That's on the news. I think that the SEC is dropping its cases against XRP too. BNB is at 634, up a couple of percent too. Getting into the meme coin side of things, we have Doge up a percent, got Trump up a percent, Bonk up 5%, Pengu is up 6%, SPX, Murad's coin is up almost 9%, Fartcoin is now up 10%. I think it was up as much as 20% in the 24 hours not so long ago. AI16Z up 7%. So like a reasonable amount of green actually on the meme coin side of things today. Getting into the headlines themselves, we have, as I said, a bunch of majors being green, mainly because of the FOMC meeting seems to have gone relatively well. Legendary is going to dive into the details there, why people think that was the case. Trump media execs launched a SPAC to raise $179 million on US-based crypto data security firms. That's interesting. I want to put that into context a little bit later as well. Two more things. Privy raised $15 million led by Ribbit Capital to continue to build out their Web3 wallet infrastructure. And then finally, Kraken is close to buying a futures platform, NinjaTrader, for $1.5 billion, according to the Wall Street Journal. Again, more examples of M&A coming to crypto. And I can definitely see that trend continuing as the administration makes crypto far more easier to interact with and transact with and to do business in. Legendary, anything going on the NFT side that we should know about?
Bit of a positive move, bit of a green day. We have most of the major collections up anywhere between 3 and 4%. That means that Pudgy Penguins, for example, are above 9.5 ETH, actually, at 9.6 ETH. Azukis are closing in on 2.5 ETH. Doodles above 3 ETH at 3.1 ETH. Bored Apes pretty much flat at 12.6 ETH. So basically moving in line with ETH and not yet have reflected the ETH sell-off of the last 1 or 2 hours.
Okay. It's not a huge amount going on there. There were some big other notable sales. Remember, we talked about Sam Spratt's masks. They've still around 14, 15K floor, but there was a Skull of Lucy with a corresponding mask, which sold for 100 ETH yesterday. That was pretty big. And speaking about the Good Vibes Club, there was another top sale of 13 ETH yesterday, the one we're sharing on screen. Remember, we're live on video as well if you want to watch in with us. Getting into the rest of the Web3 roundup to get up to with everything else that's happened in the last 24 hours, President Trump is due to address the Digital Asset Summit in New York today, the first time a sitting president has addressed a crypto conference. That's what Blockwork said. I don't know if the Bitcoin magazine's Bitcoin conference will have something to say about that, but big news. So we'll be, I guess, watching carefully what is said in New York later today. I wonder whether I thought Funky is with us. I wonder whether he's unable to speak though, because I think he's in New York to consider what that could be about. Ripple, as I said, is up 8% to $2.50 as the SEC drops its case. North Carolina senators introduced a bill to invest up to 10% of public funds into Bitcoin. So there are certain states where that is still moving. I know a couple of them were rejected, but it is moving in some. Solana ETFs are ready to launch today. That's the first ever Solana ETFs in the US are launching from Vol Shares. That was reported by Eric Balkunas. Uni token holders approved $165.5 million in new foundation funding. Blast, Blast from the past, one of our favorite apps and chains, it's gone live for whitelisted wallets on their app store. This is their mobile. They're going super big on mobile. I kind of want to play with that. I want to see how that's working out. Doodles announced they'll share a white paper before the Dude launch. And finally, highly anticipated final Bosu mint on Abstract revealed its mint details. Going to be $180 or the equivalent in ETH, and it will be on March the 24th. This seems to be the biggest, most anticipated mint on Abstract. Legendary. That is the Web3 roundup. Before we get into the main stuff today, what is catching your attention from there or elsewhere?
Two things I want to touch on. One is Uniswap, because those 165 million in the new foundation funding also go hand in hand with one of the governance or two governance proposals that have been voted through, and one of which has to do with the groundwork to finally activate the fee switch, which we now have a bit more regulatory clarity on to be able to do that. And again, that goes back with that narrative that we had, I feel, half a year ago, to try to value DeFi protocols based on the revenue that they generate, and keeping in mind that if they have a token at one point, they might redistribute parts of that revenue to token holders back as sort of a dividend payment. And that was basically shut down before Trump was elected for regulatory reasons. And now it seems like we are moving quite quickly into the direction of turning on those fee switches. And I'm very curious if you extrapolate that a bit to see how this will play out, because I feel like it naturally has to become a race to 100% basically, because the foundations hold the tokens themselves mostly. So they will have to distribute at least the majority of the revenue, because I feel like other protocols will do that as well and will increase that. And then the question is, if that becomes the standard, they're redistributing as much revenue as they can, how that will affect the entire pricing of DeFi protocols. So if you will then have to, as a founder, as a developer, whatever, as a team, focus more on like driving individual campaigns to drive volume back in order to drive fees back in order to drive token price up, or if you will have basically a pretty clear winner that already has most of the volume and that will keep to continue winning this. And then the question is also, how will DeFi aggregators and aggregators of aggregators like DeFi Llama Swap and Kyber Swap, for example, deal with that? Because I could then very well see a world where there's like some sort of additional incentives going on to either have a cheaper route or to have like a specific additional kickback if you do the transaction on Uniswap while you're a Uni holder. And I feel like that could be a period where becomes maybe a bit more intransparent for a while, what actually the best way to go is, and in terms of how you want to swap and where you want to swap. So I'm quite interested how the game theory and all of that for the DeFi landscape will play out.
Do you think there's anyone specifically well placed for that?
I would probably say the protocols that have the most money because they can steer the most incentives, and Uniswap is definitely one of them.
Yeah, I think that's probably the case. And do you think that value will go to the token holders eventually?
Yeah, I think it will have to go to the token holders, and that share, that stake of value going back to token holders will have to increase, because if someone starts at 20%, next company will go at 25, then that someone will go to 30, et cetera, et cetera. So this will be a race to almost 100%, I think.
Yeah, interesting. I'm just looking at the Uniswap chart yesterday on the news, showing it on screen for the people who are watching in. We have it definitely jumped. It was up, I think, as much as 10% at one point in time, but maybe now just around 3%, 3 to 5%. People, I think, like the news. In general, though, all of this talk, I mean, in the end, you just got to watch how things are playing out. You know, the positive news around regulations and the freedom with which these companies should be able to operate ultimately has not had good news over the last 3 months at least. Uni was at $14 not so long ago. Now it's at 670. I'm just trying to see. Okay, so again, similar to most other coins, actually, it's kind of just gone up and down in the same way that Tesla ramped up and then has given up all of the gains post Trump. This chart is exactly the same, where it's gone. It's gone off the screen now. Yeah, there you go. You can see from October into November, it went up a bunch, kind of peaked in December 2024, and then it's kind of given up all of those gains down quite a lot in the last couple of months. So I think it's probably not right to take too many learnings from when you're looking at the DeFi sector. It's probably not right to take too many learnings from it, because ultimately so many of these charts look exactly the same. Like the Uniswap chart basically is looking the same as the Tesla chart. So I think that's probably one of my takeaways, where sometimes you're looking too much into what's going on specifically, when macro and Trump and domestic policy and foreign policy has completely taken over and grabbed everything. We're basically trading on his tweets and the Fed's decision on rates potentially. So I think that's a little bit what's happening. Any final reflections there, Ledge, before we keep moving?
Yeah, a final question for you on that, because yesterday we spoke about the permission pools coming to base via Uniswap v4. So basically having quote unquote KYC pools that are more directed towards institutional participants to also be able to use decentralized finance, but obviously in a bit of a different way. What do you think is the bigger price driver or driver for the DeFi ecosystem? Is it this fee switch narrative, or is it actually getting permissioned infrastructure, getting permission pools on to try to cater more to TradFi plus institutional players?
Look, it's a good question. I think the fee switch thing is big, and I think that the people who are making money already, like, they'll just continue to make money in the way that they're making money without knowing any of the numbers. So this is purely off. This is not off a whole lot of intuition, and I guess it's kind of a new industry, so it's hard to know. But I would predict that if you could capture some of that permissioned volume, you really should. And in that sense, maybe I disagree with. We looked at the aerodrome example yesterday, where Bread was talking about. Some people were like, "Oh, our base screwing over aerodrome, which is their biggest DEX. Should they have done this with aerodrome?" And it seemed like aerodrome were of the opinion, like, "Look, guys, we're doing great as it is. This is a new thing that you guys are trying to do. If you can prove that it has PMF, then yeah, maybe we'll consider it in the future. But we actually don't need or want to do this now." I think, kind of as we described yesterday, this is in the mindset of the universe being full of like ores, where people are saying we can do this, or we can do that and thinking that the world is binary in that sense. Whereas I'm more of the opinion, whether it's to do with DeFi applications or permissioned or unpermissioned pools, or whether it's the different kinds of media you consume, it's more a case of and. So it's like, yes, we're going to have permissionless stuff and we're going to have permissioned stuff. And given that there is going to be this new market entrants that want to do the more permissioned stuff, I suspect you'd want to have a slice of it. I do see there being benefit in being specialized and people really knowing your brand for being outstanding at something. And sometimes as you get bigger, your brand can't necessarily expand to include the variety of things. But personally, I'd probably want to participate in that stuff. And I think that market will be sizable. So I guess to your specific question, is it worth going in that direction? I think so. Not to the detriment of the permissionless stuff, but I think from a business perspective, I think that that market will be sizable based on the way that some of these corporates have been speaking at some of these conferences that we've been observing, and just the general trajectory and observation of how these things have been moving, in my opinion. Thoughts, Ledge?
Very much agree with that. I think we've seen two good examples. One was PayPal incentivizing PYUSD farming on Camino Finance quite significantly. The other one is Wintermute with Wildcat, where they also offered, or still offering, I don't know how full the pools are, rather attractive.
One of them filled up.
Yeah, is the stablecoin pool gone?
It was gone, and then they've raised it. So yesterday, remember we spoke about Wildcat. Wildcat last week, we presented as an interesting opportunity where I guess Wintermute are seeking credit, a credit line to the public. You can lend to Wintermute directly. The USDT, you can lend USDT or USDC at 12%, which is, beating everything else that you're going to get on the market. So yesterday I actually went into the USDT pool with some that I had, and then the USDC one was closed. I think they were seeking 20 million. I remember when we looked at it last week, like it was loads and loads of space that had actually filled up. But then when I checked again later, it looks like they've added an extra 10 mil. So
oh yeah, I just see that.
They're now having space for 30 million. And so I entered a little bit there as well, just because I wanted to try it out. Noting the risks, right? The risks being, well, this was the conversation that took place in the timeline last week. If you were the type of entity that could get this kind of funding from more traditional places, you would. Therefore, it kind of skews towards the type of entities that can't get the type of funding, which means usually this type of debt would be considered or maybe lower quality or like higher risk. But, I guess everyone can make their own decision. I thought it'd be interesting to try. Did it with a relatively small amount. So, lending to Wintermute. So that's one of the biggest market makers in space. So we'll see how that goes. Sorry, Ledge, I interrupted. Was there anything else you want to say there?
Yeah, just those two are like really good examples for institutions trying already to find a way to kind of connect stronger to the lending markets, to incentivize DeFi plays. And very much agree on the Wildcat side. I do want to have some exposure to the platform and give it a try. I also just did the favorite thing of checking the BTC pool. We said it once when we spoke about the news first time that I think there was like a total of 0.3 BTC in that being loaned to Wintermute. That number is still very, very low. We are up to 5.2 BTC and they're seeking for a total of 200 BTC. So it does seem that people have way more appetite to give away their stable coins, but are very, very conservative when it comes to Bitcoin.
People don't like lending. People don't like interacting with Bitcoin. Like no transactions with Bitcoin in their wallets. I think that is how people view that. And to be honest, I'm kind of similar. I don't know. It's a psychological thing. One thing I wanted to bring up before we get into the main stuff, we missed it yesterday because I think it happened just before the show went live. We had Hyperliquid announce that they're introducing staking tiers. So I'm going to just share this on the screen for people who are watching in and just take you through what that means. The price yesterday, Hype was up at least 10%. I think it might have given up some of those gains potentially overnight, but this is what they've said. They've said Staking tiers will be determined by the amount of hype staked. The initial benefit of staking tiers is reduced trading fees. These updates are expected to go live on or after April the 30th. So a bit of time actually before these updates are expected to go live, to give people time to adjust. As part of the update, the overall fee system will be reworked. So the new fee system will have the following properties. Even without staking discounts, perps and spot fees are lower than centralized exchanges for most users. Fee sensitive users can stake hype to benefit from even lower fees than the existing system. Protocol revenue is projected to increase. And number 4, crucially, potentially, hype will have more utility for users. When asked what else is changing, they said separate fee schedules for perps and spot volume counts double toward your fee tier. What is not changing? Okay, just a couple of other things, but interesting news there. Legendary staking tiers being introduced with Hyperliquid. I think this is trying to model the Binance model, potentially trying to, incentivize people to lock up their hype. One of the interesting comments from Moon Overlord, prominent crypto Twitter trader, was the initial benefit of staking tiers is reduced trading fees. Okay, Jeff, insinuating that there should be more to come, I think, because of that point number 4, which is hype will have more utility for users. Any thoughts on your side here on this news coming out of hype and any of the benefits that they've described?
Makes a lot of sense to have that going. Makes a lot of sense to look at the existing trading volume, see how much hype the whales are holding, and kind of try to play around with those fear teas. I think if you look at the staking tiers and at the max tier, the difference between like the highest and the second highest tier, second highest being coming in at 100,000 hype, the highest coming in at 500,000 hype, which is quite a lot of money to jump from a 30 to a 40% discount. But it does make sense to have it so high, because otherwise everyone would basically fill up the tier that suits them best. That makes just sense from an equilibrium standpoint to optimize for reducing their fees and keeping a hype exposure that they're like happy with, but having this upwards potential for future growth of the platform, for getting people in where it makes sense to put in an additional 400,000 hype, an additional, what is it, 5 mil at $13 or wherever hype is trading right now, to just get 10% more discount. You need to have insane trading volume to do that, but kind of inspires you to think about the potential growth trajectory of the platform. So it makes a lot of sense to structure it like that, and I'm pretty curious to see what those future benefits will be, other than staking hype to get more hype and have yield on that. Probably more stuff to do in connection with the EVM that they are building, but smart system. Nothing surprising. Jeff keeps delivering.
Yeah, I think it was the logical next step, right? So we'll see how that goes. Obviously, hype being the leader in this new on-chain perps platform that's trying to be the on-chain Binance. I think there's going to be a lot of competitors coming. I think we're familiar with some already. I posted earlier today, if you're looking to check your eligibility for another airdrop, I posted earlier today on my personal account that Definitive are trying to get some of hype users over. If you did 100K of cumulative volume over the last few months, you should be eligible for their drop, which is going to come soon. They've built a similar type of product, and I think there's going to be more. There's going to be more. People have seen how successful hype have been, and so they want to get in on the action. Okay, that's that. I think we will just quick shout out to Overarch in the YouTube comments. We've got some interesting information. Oh, Wasabi, we're talking about USDC yields. Wasabi have 10% above average on USDC at the moment. That's not bad. That's pretty good actually, compared to a lot of other reputable places where USDC yields gone quite far down when you're lending to around the 4% region, I think. So good shout out there. Before we get into the main stuff today, Ledge, we're just going to take a look at our mode segment. They've been building some really cool prediction stuff going on. Why don't you let it rip? What's going on here?
Yeah, absolutely. Pretty excited about this one, to be honest. Mode has developed a unique model to attempt to forecast the price of BTC And so far, the accuracy of that seems pretty promising. What the model does is it's on the one hand leveraging the synth subnet on BitTensor and its synthetic price data to allow agents and LLMs to create forecasts and use probabilistic reasoning. The reason why you want to use synthetic data is just because you can use even more data than quote unquote exists in the real world. It's something that car manufacturers like Tesla also do, because you have way more data in simulated worlds to improve the accuracy, whatever model you're building. And the model that Mode is building is based on so-called Monte Carlo simulations. By definition, that's a mathematical technique that is simulating the range of possible outcomes for an uncertain event. In this case, that is the price of Bitcoin, and we are sharing this on screen as well, a post by James Ross, the founder of Mode, which is explaining pretty well what is going on there. So you can see it on screen that there is a top graph that represents the top minus Monte Carlo simulations of the price actions over the next 24 hours. And the histogram below is showing the probability at the selected time period that the price will be in a certain range. So if we take a look at a more recent example, James used this model to analyze the chance of the Hyperliquid whale with the 500 million BTC short, which we talked about on the show a couple of days ago, and the question whether that whale will be liquidated or not. And once the prominent trader CVB started to work on getting the Hyperliquid whale liquidated and started to post about that, you can also see that in the BTC synth model, that chance that the whale will be liquidated increased to a 32% chance of liquidation. It was 17% the day before. And looking at that chart, the percentage is the cumulative probability of all paths above the red dotted line. It's a bit hard to see, I think, on the chart, but we're going to post the link in the comments, which then forecasted a BTC price above $85,540, which is exactly that price where the trader would have gotten liquidated. However, that also means that the majority of price paths, 68%, did not predict a liquidation. That's also how the story in the end played out. The Hyperliquid whale did not get liquidated on his short. He did close it with $9 million in profit as BTC went even lower before it obviously started to recover up to the level that it reached today. And personally, I'm pretty excited to play around with this forecasting model once it's live in public access, mainly for the reason that I used to play around with Monte Carlo simulations for my own master thesis. So I'm curious to see them in action with the BTC price models, and I'm definitely going to report back on that as part of our partnership with Mode.
Yeah, this is super interesting. Really, really interesting. As you said, like I've maybe am newer to this mathematical modeling, but these charts look really cool, and I think it's important, or the thing that I've developed most in this space as an investor or trader or some combination of the two, is thinking in terms of probabilities. Thinking in terms of probabilities is probably one of the best advancements that I've made. And I think any modeling that is encouraging you to think in terms of probabilities rather than just, is the price going up, is it going down, is super helpful. So I'm excited to explore that as well. As you said, as we partner with Mode and kind of see how they continue to build out that product. So that's that. Let's get into the main headline today then, Ledge. We obviously had the FOMC meeting yesterday, which actually I saw a bit of a split on the timeline, to be honest. I saw some people interpret it negatively. I saw some people think it was super positive. The market obviously responded pretty well. Tell us what we need to know first and foremost, and then how did you interpret it?
Yeah, main news is market responded positively. BTC is up. BTC is holding pretty well above the $85,000 mark. However, there's a bit of both positive and negative ways to read the FOMC meeting yesterday. Let me bring up this article on screen. So what has happened is exactly the expected outcome. There wasn't any change in interest rates. But what has also happened is that Jay Powell once more confirmed we are still on track to have rate cuts towards the end of the year to reach that target rate below 4%, which means we will have to cut rates by 50 bips, by 0.5%. And the market is still thinking, as a result of that we'll see those two rate cuts of 25 bips each towards the end of the year. However, Paul also said that he's not going to be in any hurry to move on rate cuts. So it seems like we are on a bit of a slower trajectory, but nothing that is specifically negative has come out yesterday that would have surprised the market. What he also did, J. Powell, was addressing the impact of tariffs on inflation and making the pretty honest point that it's actually pretty hard and difficult to assess how it exactly will affect inflation. There's still obviously fears of inflation going up again, but that is in quite a stark contrast to the commentary on X, where it seems that everyone has obviously become an expert on tariffs and is very, very easily able to connect the lines and say, this is exactly what's going to happen. But typically, the Fed taking a bit more of a careful stance there. In terms of some more negative news is that we've seen the projection for 2025 GDP growth being revised downwards to 1.7% from what was 2.1% in December. Unemployment forecast up a bit, 4.4 from 4.3%. And also PC inflation up at 2.7% from 2.5%. So it's a bit of a cautious tone coming out from the Fed. But again, I think the mainly positive thing as a result of that is that we are still having that target of 50 basis points of rate cuts in 2025. Just to have a bit more color of what is also going on, one of the things you pointed out in the snapshot, it is exactly Donald Trump giving the video address at the Blockworks Digital Asset Summit, which was announced a bit later than the FOMC, and that probably also had supported the price action a bit. And then another stat that I wanted to check in with again is something we took a look at the beginning of the week when we looked a bit at the overall market and at the recession fears, which on Polymarket had peaked at 44% only 5 days ago, so on the weekend, and that number is down significantly. It's down at 34%. And one of the comments in Polymarket was actually pretty accurate, saying, so J. Powell says there's a 1 to 4% chance of a recession. Major US banks see a 20 to 25% chance of a recession. Meanwhile, Polymarket degens think it's 38%. So there's definitely a bit of a more aggressive pricing or more cautious stance, at least for the Polymarket bets. I think the market has a size of $830,000 towards the recession fears, which makes it kind of interesting to think through what is actually going on, because you have this more cautious standpoint from the Fed. You have, and I would say Polymarket is still a platform that's more used by crypto native people who have this, say, high or increased fear of a recession potentially coming. Yet BTC is reacting positively. And I've seen a couple of people painting that picture on the timeline again, that if we're heading into a recession, actually BTC is the asset to hold. That is something you want to buy. And then that again, if you look at the gold price, gold also had reached an all-time high, going above 3K per ounce yesterday for the first time. So it does seem that both the more traditional market is liking gold a lot, and it also does seem that as a result of the FOMC meeting, we have seen a pretty significant price movement, I would say, against the total volatility of the market that we've seen over the last couple of weeks to buy more Bitcoin.
I like it. I'm glad you brought up gold, because that's something which has just continued to rip, right? Gold is through its all-time high. I think you've got the chart there. Where are we at on gold now, Ledge?
$3,030 per fine ounce.
And that is all-time high,
more
or less. What are you thinking in terms of the connection between gold and Bitcoin at all? Obviously, one being described as digital gold, rarely ever actually operating like that in the market. Do you think the time where that starts to happen is getting closer? Do you think that ever happens? Or is Bitcoin going to track Tesla and other growth stocks moving forward?
I think that is very hard to answer, because there's so many things going on at the same time, right? And we're trying often to reduce like a multi-dimensional model to like one single thing.
Yeah.
Yes, there's good reasons why gold and BTC are moving hand in hand now, which is obviously the recession fears, the instability that's going on. Then you have the whole set of things that You hear from Trump's environment, from the family, from people close to him, that the goal is still to buy as much BTC as they can. Then you have those regulatory news going on. You have apparently a big announcement coming tonight at the video address. So there's many reasons that make sense for BTC to go up in price, and some of which are also positive news for the gold price, but others don't affect gold at all.
Okay. I think it's interesting. I think, yeah, as you say, I think we've moved into a market where we're just we're completely hooked on the president. It's a president's market. Just however he decides to behave, at least that's how the market is going to react. Obviously, if you were to abstract them away, there would be a market without him saying the things he's saying. But at least in terms of reactions, we've got like a really knee-jerk market at the moment. Maybe that's how I'd describe it. A knee-jerk market at the moment. And that's the kind of way we're operating. And my response to that has largely been to not do knee-jerk stuff. Just have a nibble at the things which I think are decent long-term. And if we go lower, we go lower. I think that's my kind of reading of the situation at the moment. But I appreciate your analysis, because there's definitely a bit of back and forth on whether that was positive. I know the markets responded well. Just want to articulate the opposite side for people in case they're wondering, well, the markets are up. Why are people even saying anything negative? This was Quinn Thompson, who appears on the Forward Guidance podcast. He said the bottom line is this is hawkish. Number one, inflation expectations are higher because they spoke about inflation. Number two, growth labor market expectations are worse. And number three, the number of participants expecting one or fewer cuts in 2025 went from 4 to 8. Participants expecting 3 or more cuts in 2025 went from 5 to 2. So people are definitely interpreting it differently. Just wanted to put that out there so people can get a sense of like the specific reasons why people might be taking an alternative view. Market seeming okay at the moment, as we just described. Maybe we'll leave it there unless you've got anything else, Edge.
Yeah, one final thing maybe is the sentiment. To take a quick look at the fear and greed index, which seems to be out of the fear zone. We did breach the yearly low extreme fear just 9 days ago on March 11th, and now we have been trending upwards. We are at 31 for the fear and greed index, so we are only 9 points away from leaving the fear stage and going back to neutral. The last time we've been at neutral was towards the end of February. So it seems, at least from the overall market sentiment, that the reading of the FOMC meeting and the news of the last days has been a rather positive one.
Okay, interesting. Good additional bits of data. Hope that variety of data was helpful in some way. Let's keep it moving into the next headline, talking about a president's market. This is more presidential or adjacent to presidential activity. This is the news that a SPAC, a special purpose acquisition company closely linked to Trump Media and Tech, is seeking to raise $179 million to fund its acquisition of a company in the crypto and blockchain, data security, or dual use technology sectors. This is important because it is further emphasizing the deeper intertwining of crypto and the Trump family business. A few other things here happening in the backdrop, which I think is important. The administration is going ahead at tech speed with the strategic Bitcoin reserve and exploring ways to add it to the budget in a neutral way. You've got the administration ending many of the SEC legal battles against crypto companies, showing a much clearer path for crypto companies towards compliance and success in the US. You're also getting much more crypto M&A. So this is clearly demonstrating appetite for crypto M&A. Linked to this today in the snapshot, reported that Kraken is close to buying futures platform NinjaTrader for $1.5 billion. This is now appetite being expressed from Trump's companies. They also want to participate in this M&A. This is an industry that they, I guess, want to bet on moving forward. And so, yeah, it's another example of Trump family business deepening their business interest to the industry. We obviously had World Liberty Fi already, which announced $550 million worth of token sales just a few days ago to further DeFi. So I think people will still have more questions on like this Trump family business involvement. I know for certain the World Liberty Fi stuff has rubbed a lot of people the wrong way. They don't like how some of those sales have been conducted or how they've been allegedly conducted. Either way, I think at least one of the big takeaways still would be crypto M&A is going to come. So like all of these companies that have been building for whatever period of time and might have been looked at as not possible to touch because they're in the business of crypto. I think if we haven't already got that signal already, which we should have done because this M&A has already started, then this is just an additional signal that that's going to be more to come. And so crypto businesses will start to look increasingly attractive as we move forward under this administration, with the caveat being, I hope that it is done in a compliant, proper, above board way, because you don't want crypto to be such a political football that we swing so aggressively and confidently to the side of being pro crypto that it alienates so many people, makes loads of people think it's a scam at the same time. And therefore, when the next administration comes in, they want to try to undo some of the excesses. So I think sometimes it's a bit of a pendulum. You hope that as you make a move, you take like responsible strides rather than swinging so aggressively that the other side are going to have to swing aggressively back. So that would be my one caveat and the kind of thing that I'm hoping gets done in a responsible way. Ledge, curious for your thoughts here. What are your thoughts on this kind of crypto M&A and maybe specifically the Trump family business interests moving in that direction too?
Okay, a couple of thoughts on that. So, I very much agree with exactly what you said, the general direction, getting more exposure to that we get quite a lot of signals as to where the Trump family is headed and as to where the regulatory landscape is headed with that, which is all very, very positive per se. I still am very curious, that's the second thought, to see what the end game of that, call it crypto empire, that the Trump family is building is. And the only thing that specifically rubs me the wrong way about this SPAC is that it's not incorporated in the US. It's actually set up in the Cayman Islands.
Cayman, isn't it?
Yeah, of course it's Cayman. So I'm like, this would have been such a good signal to say, look, we're gonna do crypto M&As. We are gonna do this strong focus on digital assets for US companies, but we're also gonna invest from inside the United States because we are shaping, the landscape, the regulatory landscape for that to make sense from both a legal but also financial standpoint. And so that's the only thing that I don't like about that. It's being set up in the Cayman Islands.
Yeah, I think that's fair. Maybe just a little bit of speculation as we draw towards the conclusion of the show today. We've got 5 minutes left. Rather than get into the next headline, which we can do if you want, but I'm just wondering, do you have any thoughts as to what direction this, I mean, to the extent that we're focusing on the president because he keeps coming out with, seems to be like a new event each week, which is kind of capturing crypto attention. But obviously yesterday he said he's going to be speaking in New York today. Any sense of what that could be about? What are your thoughts in that direction, if any at all? Like, do you think it's something we should be paying much attention to?
I think we can't ignore it because we just don't know what is going to be announced. So for that reason, yes, we have to pay attention to it. I have no idea which way this is gonna go. There's been a couple of rumors, but they didn't seem very substantiated on the timeline. What I do think, however, is if you take a couple of steps back and you see the Trump real estate and hotel empire that has been built over the last decades, that it seems, just from the intensity of exposure that the Trump family is getting, that this is becoming basically Trump Empire 2.0. So setting sort of the generational foundation to transition the family's interest from more of the real estate side into the digital asset side. And that is a pretty big move to make at that scale, because it's way more than buying Bitcoin, buying ETH, and then, seeing the price go up as you shape the regulatory landscape. It's significantly different from that if you have things like World Liberty Finance, like this SPAC that is being set up, like so many other things that the family has been doing. So to me, it seems like that is, from a wealth management perspective, if you think about like the entire Trump family, Trump dynasty, a complete strategic shift to say our next big focus is going to be digital assets. So this is why we want to have exposure across the board.
Yeah, I think that's fair. I mean, I doubt they're moving out of. I don't think you were suggesting this, but I guess they've got a very strong hold on the real estate business. I guess they understand that super well. But this is clearly an attempt to enter into, in a hugely significant way, this new frontier of digital real estate in some respects. Okay, interesting stuff, guys. I think maybe we can call it there for today. Maybe the final point being this raise. Oh, the what was the other one, Ledge? The Kraken one. The Kraken piece of news I thought was
buying Ninja Traders. What is it? The perps, the futures platform for $1.5 billion US.
Yeah, I think that would be my final parting thought. I just think, in line with everything we've just said, we've said it over and over again on the show, the increasing nature of institutional and corporate news, the increased M&A activity that's going to come to crypto, I think is going to be significant. And one interesting point, which we said yesterday, for the first time in one of the raises that we reported on yesterday, I think it was for one of the ones that was, I think it was the Crossmint raise, when in the interview with the founder, they asked, like, how are these investors going to get paid back? And in brackets, they actually said, for the first time that I've read in like a public forum, they said they will not be receiving tokens. Like, it's actually for equity. And as someone who's been investing in this space, and I know as well, we're relatively immature to that game. Like, we've been doing it for maybe a bit more than a year or so. But like, sometimes you get equity in a company, sometimes you get tokens. Well, you always get tokens when you're doing crypto investing, because that's where you get your exit as an investor. But sometimes there's equity involved, sometimes there's not. To be honest, I don't know how many people are like super keen to get the equity, because that's not the way that you get the exit. That's not where your funds come from when you get returned something, because the market, you get your exit via the liquid token market. And I just wonder whether this is something I've been thinking about. I wonder whether this is an opportunity for proper companies to have their equity valued at a much better rate and like respected much more, rather than this complete focus on tokens. Because if the M&A environment improves, it means that equity can become meaningful again, so long as you're running an actual proper company. And so when you're investing in these teams, having the equity can mean much more, because they might be operating in an environment where someone might come along and say, yes, I want to buy your company specifically because you're doing an awesome job. And, there's no regulatory hurdles anymore. And so you become significantly more valuable. So for the people who have even got stakes in equity in these companies, I think you're probably already getting a bump potentially. If you're a good company, if you're operating out of the States, that equity is probably worth more than it was before. I mean, arguably, maybe it wasn't worth a lot before, because that's not how people get their money. But I think there's an opportunity for that to be worth more moving forward. Final conclusions there, Ledge, as we close up.
Yeah, very much agree, which then again is bullish on all that permissioned infrastructure that we talked about on the one hand. And on the other hand, reminds me, I always forget the name, but you probably know it. I call it Santiago Chain, the private equity chain that he's building, Inversion, which is exactly bullish for that very use case that you just described.
I like it. Interesting conversation today. Hope you guys enjoyed it. As always, just a reminder, we do this every single day, Monday to Friday at 7 a.m. Eastern time. And for 1 hour, we do it. We're live on X Video, YouTube, Apple, and Spotify podcast. To one more week of being in this daylight savings arrangement. We'll always be at 7 a.m. Eastern time. But for our usual listeners who I believe are catching up with us, sometimes we'll be back in the normal time zone when the rest of the world adjusts after one more week. So In the meantime, we'll be back again tomorrow, same time, same place. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.